afternoon. Kurt Capper here with your Off the Charts video update. Hope everybody's having a great weekend thus far and looking forward here to what is going to be the final trading day of July as we move forward into August on Tuesday, and we'll see what the markets have in store for us. But as we look back at last week, it was a pretty interesting session, really a quiet session, relatively speaking, the beginning of the week, and then Thursday's sharp intraday reversal set up an important session on Friday. With a weak open, it looked like it could spell trouble for the S&P, but similar to recent drops, buyers showed interest during the morning, and the S&P never managed to get any negative momentum going. So ultimately, Friday's flat to sideways session helped stabilize the market and finished back above the 8-day for the time being. And with that being said, the strong uptrend remains intact based on that. So to get the momentum going again, the S&P here is going to need to clear the 248 area and hold above it. It's going to be another very busy week of earnings with several market-moving reports, Apple among others. So as go the numbers, so goes the SPY. At least that's the situation we're in here right now. And we'll see how it plays out this coming week. But as I said, it's going to be very, in all likelihood, earnings driven, so we'll see how it all plays out. As we move on to our trades here, starting with Norwegian Cruise Line, which we have as an open long. It had a tough day Thursday along with most of the market, but rallied into the bell that day to finish back above the key 55 mark. It opened lower Friday but bounced around Thursday's low and the 20-day, and it bounced back above 55 heading into the afternoon, where it caught some buying into the bell for the second day in a row, and this time managed to close back above the 8-day and the 55 level. So buyers are defending the important levels well on Norwegian Cruise Line, and it's beginning to build a higher base above the previous one, which was around 53.5 to 53 earlier in July. Now, options were busy on Pier Royal Caribbean with earnings due out this coming week, and the cruise lines have been on a solid run with strong earnings recently, so we are expecting more of the same from RCL Royal Caribbean this week. Ultimately, everything looks fine. You got a nice little pullback here. We'll look for this to continue moving higher. Next on the list here, Red Hat, RHT. This is another open long position, and it opened red Friday and right at the 20-day, but ricocheted off it back to the upside here quickly. It opened above the 8-day a couple times during the morning, or pushed above the 8-day a couple times during the morning, but was ultimately unable to reset above that key moving average. It ultimately held steady around the unchanged mark for most of the afternoon, but a little late selling put it back in the red before the close. Now, stabilizing Friday following Thursday's big reversal was a positive, and even though it finished the day red, it held the 20-day perfectly once again and closed above it for the second session in a row. So what we're going to look for on Monday is to see if Red Hat can reclaim that 8-day, and once it resets above that level of support, it can start working on higher prices once again. So first step is going to be getting back above the 8-day, and then we'll go from there. Next on the list is STLD, and these steel names, they've been incredibly frustrating of late. Comments from Trump concerning timing of tariffs couldn't have come at a worse time for STLD, which was right on the cusp and really did start breaking out. It was at its best levels and closing prices since January, but broke down back to the downside following those comments. And it did stabilize Thursday and managed to finish slightly green, but was knocked lower Friday when Pier X was downgraded by an analyst to sell. So STLD dropped throughout the morning Friday and ticked down into the stop range of 35 to 34.75 very briefly in the afternoon, but snapped back above 35 quickly, so we didn't exit the call position. It closed right above 35 though, so there isn't much margin for weakness come Monday. A drop below 34.86 would be a lower low and would be the cue to exit. So a break under 34.75 could set this up for a drop to 33 to 32.50. So would be best to take the hit and move on if we are getting that weakness on Monday. So overall, very frustrating, especially since we gave it so much time to set up and break out, stuck with it. Then once it does it, like I said, the timing of it could not have been worse. So it is what it is. We move on and see what sets up going forward. All right, and on a positive note, DRQ. There was some bad and plenty of good for DRQ on Friday. I was surprised to see the report earnings before the bell because there was no confirmation anywhere of the date of their release. So it's tough to hedge positions when companies unexpectedly drop earnings like that. However, in this case, we're obviously less upset because the company took down guidance for the back half of the year, and it was a huge catalyst for our short position, as this opened right at yearly support around 48, and after chopping around it the first couple hours, sank down through that key level and cleared previous lows in July of around 46.60. It then stabilized around 46 initially, but then dropped again later in the afternoon, finishing at the lows of the session on heavy volume. So today, or what was Friday, should be a day one of a big breakdown. Negative news drove this lower through that key support, and participation was high, so it appears to confirm the break of this range. And there is open room lower now, with the closest important level around 43 from 2010. So we're going to want to see this continue lower on Monday. Overall looks really good, and we'll just take it a day at a time here, but this is a very positive development here to this position. All right, so as I said at the top of the video, hope you guys are having a great weekend, and on behalf of myself and co-author Dan Darrow, we'll talk to you guys tomorrow.